Hello, everyone, and thank you for joining us for another episode of the Financial Commute. I'm your host, Chris Galeski, joined by CEO Jeff Sarti. Jeff, thank you for joining us.
Good to be here.
We had an incredible event last week, our annual Investor Symposium. Really fun event. And for a lot of people that maybe live out of town or weren't able to attend, maybe something came up, we did record the sessions.
Right.
We're going to make them available to our clients and others within the next month or so as we get them edited. But really an incredible event. We wanted to spend a few minutes today talking about some of the key highlights. Mm-hmm. So let's start with our keynote speaker. Yeah. You and Grant Williams talked about a lot of different things, but let's start with some key takeaways from Grant Williams.
Yeah. First of all, as a starting point, it was an incredible event. Truth is, I'm still sort of buzzing over the weekend. Couldn't stop thinking about it. It was just great. Great content, great speakers. Audience loved it. It was really wonderful. Grant Williams, we started with Grant Williams. It was Grant and I in a discussion. It was sort of a fireside chat to kick off the day. And we decided to lean in and talk about the election, which is always a tricky one. But I think it was a really engaging conversation where we talked about a lot of things. One of the main themes was just the elephant in the room, the polarization we're facing as a country, left versus right. And a lot of it around just acknowledging the echo chamber we're all in, because we all look at different news sources. But the problem is a lot of these channels, whether it's MSNBC on the left or Fox News on the right, they're really opinion channels more than news channels. And so it was really an interesting conversation around the lack of objectivity out there in the media. And again, the toxicity and polarized environment that we currently face.
It was also interesting how he talked a lot about, how social media, the algorithms are designed in a way to send you content that's going to keep you on their platform longer.
Absolutely.
And so they tend to be feeding you with information that you want to hear or know. And it's very difficult to kind of breach out from that and get a different view or better understanding because of the algorithms themselves. It was interesting how they talked about that, how you guys talked about that. Now, after the keynote, Grant gave a big presentation talking about one of the biggest issues that we face, not only here in the U.S., but globally, about the amount of debt that countries have and the interest costs associated with it. What are some other things that Grant mentioned that you think that our listeners should know?
This is a theme that he and I share, and this is something at Morton Wealth we've talked about for years, mainly around interest rate policy and debt levels just going massively higher with each passing year. And one of the big concerns, even around this election, is that, yes, the two parties on the surface are very different with regards to a lot of specific policies. That being said, a very strong area, powerful area of agreement is debt. They both want to spend. And all projections, whether, again, Harris presidency or Trump presidency, are that deficits will continue to expand. And again, this is something we've talked about for a number of years. That's concerning for us. Debasement of the dollar. We think a lot of these debt levels are unsustainable. So as a result, we have to be a little bit more resilient in terms of how we think about portfolios, really diversify even further than we would have a decade or so ago. He spent a lot of time talking about gold as an alternative currency and really a store of value against the debasement of a dollar. I thought he did a great job in the storytelling around that. So again, it was nice because obviously we share a lot of those views.
And some of the last highlights that I found really interesting is that, because of the issues that we face today and, inflation and asset price increase, he said more than anything right now, people need to look at investing from a protection viewpoint and really challenging themselves to make changes to focus on protection as opposed to, you could have owned anything the last 15 years and likely it did fairly well. But changing that and then understanding how your mindset, whether you're a speculator or an investor, plays into it. A speculator typically has a shorter term mindset, reacting to things. An investor has a longer term mindset. And we talk a lot about that as well. It was amazing to have them. There was a lot of buzz around new trends in investing and our private lending panel.
Yeah.
Talk to us a little bit about those key takeaways.
Yeah, the new trends in investing, that was with Sasan Faiz, our managing director of research, and the firm Cordillera that does some really interesting strategies outside of stocks and bonds, niche investments in things like agricultural lending, boat marina investing, whiskey aging, things of that nature. And then Megan Pinchuk had a couple of great panels, one with our real estate partners, but then what you alluded to, also another session with 3 of our private lending partners, one in the food space, another one an asset-based lender, and then a third one in the healthcare space. And the theme with all of these sessions, again, it goes back to your comments around Grant Williams and building resilient portfolios. It's looking for those needles in a haystack, right? Looking for those opportunities that, again, are going to behave differently than stocks and bonds. If we hit uncertainty or a rough patch in the economy, knock on wood, these really will march to the beat of their own drummer, generate cash flow, consistent cash flow along the way too. So it was great to have these managers on stage and for our clients to see them face to face, because it's one thing for us to talk about these managers and how passionate we are, but to see these wonderful managers face to face, I mean, it's just, I think it heightens the level of conviction because they're really impressive groups.
Really impressive. And there's people making decisions behind, people's money. And so it's always nice to see the person behind them, build a relationship, and understand that we are really a partnership with our private lenders and our different investment managers. I mean, they're just an extension of who we are.
Absolutely. It really is a partnership. So beyond that, I know there was a lot of different financial planning related topics. What were some of the ones that you found really interesting?
One with Priscilla and Beau, Stacey was moderating. It was how different generations think about money.
Yeah.
And obviously different generations think about money because of, potentially large events that have occurred during their lifetimes, whether it was the Great Depression, wars, inflation in the 70s, the dot-com bubble, the financial crisis that we had 15 years ago. And it was pretty cool to see Beau kind of coming at it from a millennial side of things where, money is just a number on a screen and it doesn't feel real. I mean, you can get physical cash, but no one really uses it. And then Priscilla even bringing out little pieces of gold.
She was playing the baby boomer
generation, bringing out different pieces of gold. And, she brought out a 1 ounce gold bar. And I think she said that she bought it, around $200 an ounce. Well, today that gold bar is around $2,700 an ounce. And she even has a hard time quantifying that this gold bar that she's had with her for a long time is worth that amount of money today. But really money is a tool that we can use to kind of get the most enjoyment and experiences out of life, and it is a number on a screen. But typically, people don't transact in it the way that they used to. I mean, I rarely carry around cash and use it unless I want to tip somebody. But the other day, I had to sell some Charger tickets and somebody Venmo'd me. I mean, it was an electronic transaction. I found their comments and that discussion really interesting.
Real quick on that. I had a couple of clients, baby boomer clients come to me after that session, and they said there were some aha moments for them where they said, I can really now better relate to my daughter, my millennial daughter, who I always think is spending too much and not saving. I think they were able to relate to those type of personalities a little bit better. Beau hit on something really interesting related to millennials, the angst that millennials feel. He said, really, and this is true, millennials are the first generation that have less wealth than their baby boomer parents in an inflation-adjusted basis. That causes some angst. Unaffordability is an issue, right? Housing costs, etc. So there's a lot of reasons why millennials like to go out and spend money on concert tickets, because at a certain point, they have angst around, again, affordability, coming out of the 2008 crisis, the job market, all of those things. So I think it was a real interesting conversation between the two where, again, the baby boomer parents at least can be a little bit more empathetic to the situations that millennial kids are facing.
I love the fact that we can bridge the gap between a parent and child and better understanding money. I mean, you and I talked about inflation one time. And if inflation is really running, meaning every day that goes by, your dollars can purchase less and less goods and services, you're going to be quicker to spend it.
Yeah, exactly.
And I think that that's what some younger generations are feeling today.
Yeah, without a doubt.
On the note of inflation and sort of the California housing market, I was on a panel with Mikey Taylor and Brian Farwell. And really the biggest key takeaway from that panel as to why California real estate and housing has defied the laws of gravity, meaning typically when interest rates go up, home prices will go down because of the affordability aspect. But there is a huge lack of supply in the number of available units here in California. Mikey Taylor said something to the tune of California has a 2 to 3 million unit shortage of housing today.
Yeah.
And we typically, on average, create 100,000 to 150,000 new units per year.
This is not enough.
That's not enough. I mean, we are 15 to 20 years behind the curve from having the available number of units. And so that alone is likely to keep prices very resilient or potentially go up. And the biggest problems behind that is obviously cost. It's expensive to buy land and develop these days, but also the regulation that's associated with it. It might take up to 5 years to get a 500-unit multifamily apartment building, from start to completion. And so we're likely to be in a lack of supply for a long time, unless something unforeseen happens.
That goes back to even the conversation we had on the boomer versus the millennials, what the millennials continue to face. It's affordability. It's a real issue. Yeah. And there's no really good solve that we see.
No.
There was I missed one on estate law changes coming, estate and tax law changes. Did you see that one?
I did not, but I talked with Brian Standing on our team and Scott Gilmore, the CPA, that sort of oversaw that panel around the estate and tax law changes. And obviously we're in an election year.
Yeah.
So taxes are coming up in conversation. But the main reason why is because the Tax Cuts and Jobs Act that was put into place in 2017, that is going to sunset in December of 2025. So starting on January 1st, 2026, from a tax code perspective, we are going to be living like we did in making decisions based off those rules prior to the Tax Cuts and Jobs Act. And the biggest takeaway there is that the estate tax limit, which is currently estimated by the end of 2025 to be around $14 million per person or $28 million per couple, any assets over that limit are subject to estate taxes. That is looking to be cut in half starting in January of 2026. And so if your estate is at or near that $14 to $28 million level, there are some very creative strategies that you can look to deploy in order to protect your money from estate taxes in the future, but also be able to have access to it for your life today. And if people are looking to have a conversation with that, please reach out to your Morton Wealth Advisor. We're going to engage in a conversation with Brian Standing and see if some of these strategies make sense for you.
Yeah, a lot of really important potential planning strategies in the coming year to 15 months, without a doubt. Yeah.
And then, just to kind of end it up on what happened with the symposium, we talked a little bit about illiquidity or liquidity in one of our conversations with you, me, and Megan. Is liquidity a blessing or a curse? Why don't you summarize that one?
Yeah. Typically, well, as a firm, as you know, we really embrace illiquidity. I mean, so many of our investment strategies, as we alluded to, the private lending, the real estate, we feel help to build resilient portfolios with cash flow. But what we don't often talk about is the flip side of the coin of liquidity, because all things being equal, of course, liquidity is a wonderful thing. If you had two investments and they were equal in all ways, except that, let's say, one was less liquid than the other, of course you would choose the more liquid investment. That being said, potentially the benefits of liquidity are not all they're cracked up to be. So what I mean by that is, if you think about, let's say, a pure stock portfolio, wonderful, again, that you can buy or sell it at a moment's notice, but the ability to literally, at a click of a button, buy or sell your net worth, especially when your emotions are high, greed and fear, that really drive investment decisions. In many ways, we think that really reinforces bad investor behavior. The flip side of at least having a component of your portfolio that's more illiquid in nature, where you don't see the price swings on a daily basis, you're not distracted by really an arbitrary price on your computer, it really reinforces more of an ownership mindset. You mentioned Grant Williams' keynote, investor versus speculator, more of an investor mindset as opposed to a speculative mindset. And so, again, one of the reasons beyond just the investments themselves that we're so impassioned about embracing illiquidity in a portfolio, it's actually around mindset too, because it reinforces, again, more of a long-term discipline mindset as opposed to chasing a stock price up and down.
Well, and look, as a firm and an organization, we definitely lean into illiquid investments. one of the main reasons why is kind of from a financial planning standpoint is we believe a lot in something called a bucket approach.
Yep.
Right? You've got one bucket that's your emergency fund and your short-term need. So if you've got a large expense or an emergency fund, lightning bolt hits your house and you need access to money, that's where that money goes. Next, we've got to solve for the income you need to be able to live your life because people make decisions on spending based around their income.
Right.
So that next bucket is we need to fill that up with enough assets and enough of the right investments to generate the consistent income that someone needs. Now then what's left over is money that can be set up for long-term growth. And so if people kind of embrace that bucket approach, they would be surprised to see how much more illiquid they can actually be versus, just having stocks and bonds.
I like how you broke it down into 3 buckets, the readily accessible cash, sort of that intermediate bucket that ideally is generating income. And then whatever is left over is the growth component of your portfolio. Typically, that's that third piece of the stool, if you will, is the stock piece. Most people think of stocks as liquid. Oh, that's something I can access to fund my lifestyle. No, stocks should be viewed as more of a long-term illiquid component of your portfolio that's really set up for growth.
Jeff, thank you so much for coming and kind of giving our guests a highlight of what they saw last week or what they potentially missed out and will see with the coming content in the future. Had a great time. I think, north of 380 attendees there. It's going to be hard to outdo how great that was this year. So thank you so much.
Thanks, Chris.